So today's topic is Fibonacci. Now, I'm not sure how many of you currently use Fibonacci. It's a tool that I think has gotten a bad rap because of its subjective nature. So what we're going to do here today is our best to describe what it is and what it isn't, and also hopefully teach you how you can identify support and resistance levels based upon the momentum and the direction of rallies and sell-offs, and then at that point see how you can pinpoint what the different potential, I stress the word potential, reversal levels could be in the market. And I don't even want to say reversal. We could even just call them stalls. You know, I'm never going to assume a reversal. I'm just going to assume that maybe a potential level could be a ceiling or a floor. So we're going to discuss all that, and we're going to start kind of from the ground up in terms of what Fibonacci is and how we can use it. And as we do in every one of our discussions here, I utilize live and current charts, so I'm not going back to anything really dated. We're going to be looking at the live charts. So that means that if you are in a particular market, you know, let me know what it is. Go ahead and type it in on the chat window there, and we'll take a look at the live market with the tool that we're discussing here tonight, Fibonacci, and show you how you can interpret your current either setup or even your current entry, trade management, risk management with this particular tool. So again, feel free to type in your questions, and I'm going to go ahead and switch on over to the IBFX4 platform, which you should see now in front of you. And one of the markets that I've been interested in, you know, when I have these discussions, you know, we lay out the topics, and on the day of our discussion, I start looking at the trades and the setups that I was looking at during that day, because I really want this to feel current for you. You know, I really want this to feel almost like an extension of whatever you might have been analyzing this very day, and how you can possibly apply what you're going to learn to tomorrow. You know, I want this to feel super current. At the same time, I want you to understand, you know, what the tool is that we're discussing, so that when you're on your own, you can hopefully start to put these pieces together and have just another way of identifying support and resistance within your arsenal. Everything we do here, whether it be past discussions we've had on indicators, chart patterns, psychological levels, floor, ceiling, support, resistance, trend lines, including our Fibonacci, pivot points. These are all just different ways of identifying support and resistance on a chart. But even more than that, what is support and resistance? Hopefully, if we've identified them correctly, if we've identified levels that the market's going to react to, really, what are we looking for? We're looking for what I call decision levels. Okay, everything really boils down to being a decision level, which basically means in all this analysis and all this legwork that we're doing, homework that we're doing in order to pinpoint different types of support and resistance on the chart, we're looking for where the market's going to make some sort of decision. And what are these decisions that the market can make? The market can either stall, reverse, or accelerate at a particular level. And if we've identified the right one, where the market is reacting in one of those three ways, we've found what I would call a decision level. Simple as that. That is what we seek to do throughout any kind of analysis that we're doing. You know, I don't care if it's something classic like a chart pattern or something more advanced like Elliott wave or even Fibonacci. Okay, it's just identifying those levels. So now that you know what we're doing and why we're doing it, let's get into what this is. What the heck is Fibonacci? Fibonacci is not a trading tool per se. Okay? Fibonacci is actually, if you ask me, of course, these are all just my opinions, it's a mathematical law of nature. That's what Fibonacci is. It's a mathematical law of nature. Fibonacci application can be found within chemistry, architecture, you name it, biology. The way things, and this is the easiest way that I know to describe what it is you're doing when you're looking at Fibonacci. The way things expand or contract, the way in which they'll do it, the degree to which they'll do it, the amount to which they'll do it, is what Fibonacci measures. So couldn't we call expanding and contracting rallies or sell-offs, right? Uptrends, downtrends, and corrections? Couldn't that be what we consider expansion and contraction? Expanding, like rallies and sell-offs, expanding downward, expanding upward, or contracting, pulling back. That's a correction. Okay? So what Fibonacci is going to essentially do is help you identify where the market might run into a level at which it could run into some sort of support or resistance decision level. So let's use this example right here. I think I've defined all this to the degree which we're ready to at least take a peek at an example. Okay, and if anybody has any questions, don't be shy. Go ahead and type it in. But remember, I think where people start to get intimidated, where the wheels fall off the wagon, is that they forget that just like pivot points are a way to calculate support and resistance, just like psychological levels identify support and resistance, chart patterns, support and resistance, Fibonacci is just another way of identifying support and resistance. Okay? That's all that it is. So let's not make it more complicated than it is. It is subjective. I don't think it's complicated, but I do believe it to be subjective. In fact, there might be more than one Fibonacci retracement on a chart, on a particular time frame. We might, in fact, this example right here, I could probably pull 2 different Fibonacci levels from this move we see here, this sell-off. Okay? So before we do that, in fact, let's go ahead and just pull a Fibonacci here. I'm just going to go ahead and just pull it here. And that's, when I say pull a Fibonacci, all I'm doing is identifying the high to low or the low to high from which we're going to draw it. Now, if we see a sell-off, like we have right here on this 30-minute dollar Canada, we are looking to draw our Fibonacci from the high point to the low point. Again, in this example, it's a downtrend. We're going to draw it from the high point to the low point, which is what I've done here. In fact, you can see this green line. I'm going to go ahead and see if I can't make it a little bit bolder here so you can see it. Let's make it a nice bright color. There we go. How's that? So you can see where I've drawn it. Now, you'll notice I have a lot of levels here. So before we get too ahead of ourselves, let's talk about these levels and which ones I use and so forth.